Hi, I'm Todd Rosenbluth, Head of Research at VettaFi, and thanks for joining us for our latest episode of ETF 360. I'm joined by Steve Schoffstall of Sprott, and we're going to talk about URNM. So, Steve, thanks for joining me.
Thanks for having me.
It's my pleasure. So, there's a bull market in uranium underway, right?
We believe so. There's a lot of factors that contribute to that assumption. And one of the things that we see is this growth in energy demand that we're expecting to see on a global scale. If you look at the 2021 figures out to 2050, it's about a 76% increase in electricity need just to power the world as it is today. We see in the developed world, we see a lot of that coming from emergence of new technologies and higher costs of higher standards of living. When we look at the developing world, we start to see an emerging middle class that we expect over the next coming decades to come online and demand a lot more electricity than they currently do. We're also seeing this growth in the acceptance of nuclear power that's being accepted on a global scale. Here in the United States, it tends to be something that we don't think too much about because up until recently, it's been decades really since we've expanded our nuclear capacity here. But when you look around the globe, there's about 435 nuclear power plants that are up and running and powering global electricity demand. In China alone, we expect to see about 150 or so plants either already under construction or planned for construction over the next decade to a decade and a half. So not only from the electricity demand side, we're really seeing nuclear be embraced. And from our standpoint, there's also a third component that comes into play, and that's around energy security. With the Russian invasion of Ukraine, that's really something, particularly for Europe, that's taken front and center stage. We expect to see that continue to happen. And we're seeing moves with legislation from Western countries looking to bring uranium production back into more friendly environments. And we expect that's something to play out in the future.
So, you touched on the clean energy transition. How is uranium impacted?
So the energy transition for us is a place where we see a lot of growth potential as it relates to the uranium sector. And for those that aren't familiar, the energy transition is a global compact of 93 countries that have come forward and said that they want to decrease carbon emissions until we get to the point of a net zero carbon emissions output by 2050. For us, what we're seeing is countries now begin to realize that solar and wind might not be the only way to get us there. And just a little anecdotal evidence around that. If you were to look at the power that comes from nuclear energy, if we looked at the United States, for example, we could power the entire U.S. With about 470 square miles of nuclear infrastructure. And that's power plants, spent fuel, and uranium mines. Just to expand that out a little bit, if we were to provide the same power from solar panels alone, you're looking at an area about the size of South Carolina. And if we were just to use the onshore wind farms, you're looking at a much bigger scope, something larger than the state of Montana. So the reliable baseload power that nuclear energy provides, along with its clean energy transmission, is something that we think is going to play a prominent role as we move through the energy transition.
Wow, that certainly paints a picture. So let's talk about the ETF URNM. Can you tell us more about it?
Sure, that's our flagship uranium ETF. It's the Sprott Uranium Miners ETF. It has about $1.3 billion in assets under management. It follows the North Shore Global Uranium Mining Index. It's really become a bellwether in the uranium mining space for investors looking to get exposure to uranium miners. And one of the things that we really appreciate about the index is not only does it provide pure play exposure to uranium mining companies, and when we talk about pure play, we consider companies that are generating at least 50% of their revenue or have at least 50% of their assets tied to uranium mining activities. It includes that at about 82 to 83% of the index. And then the remainder of the index is actually invested in physical uranium. So it does give investors the opportunity to not only benefit from the miners, but also from the movement in the underlying physical uranium.
So you alluded to it, but could you just talk about how the fund stands out from some of its peers?
Yeah, the main thing for us is it all comes down to pure play. So we really want to focus on providing investors the exposure to the sector if that's what they're looking to do. So some of the other index strategies or other funds out there may go downstream in that they're investing in companies that are maybe ancillary to the uranium production. They could be downstream, such as engineering firms or building the nuclear power plants themselves. For us, we believe being upfront at the beginning of the supply chain is the place to be, and particularly for that, as we do expect to see the supply and demand dynamics continue to shift in favor of higher uranium prices. We would expect to see those producing uranium to benefit to a greater extent than those companies that are more cost receivers or downstream.
That makes sense. Well, thanks a lot for joining us, and thanks everybody for tuning in to ETF 360. We'll see you next time.
Thanks for having me.